Oh, good evening, everyone. Sorry to have kept you waiting for a while. I'm sorry that you had to queue earlier on, but it's a very, very popular event. So I'm Matthew Taylor. It's my pleasure to welcome you to the RSA this evening. We're here at the start of a week of events marking 10 years, almost exactly, to the date since the UK's Northern Rock emergency heralded the start of what was to become the global financial crisis and a period of deep economic recession. Working with a global network of partner organisations, the RSA is hosting a number of events here this week to reflect a decade on from the crisis on three key questions. What lessons have we learnt from the crash? Have we taken the necessary steps to reform our economic systems in response? And how can we develop a wider understanding of what is needed to deliver a fairer, more resilient and sustainable economy? So I know there are many events, big and small, happening around the country, indeed the world, as part of the 10 Years After series. And I just want to say a special thank you at the outset to an RSA fellow, Henry Levinson-Gower, who's been instrumental in bringing this initiative about. As part of our activity, many groups will be joining in by live stream to engage in the conversation. So I'd like to welcome everyone watching us live online and remind you to tweet your thoughts on the hashtag 10 years after. So there would be no better place for us to start this week-long conversation than with Alistair Darling, who, as UK Chancellor of the Exchequer, was involved at the highest levels from the outset of the financial crisis, through the heart of the storm, and played a leading role in restoring stability to global financial markets. So this evening we're going to ask Alistair to reflect for us 10 years on what he feels we have and haven't learned from those tumultuous events, how vulnerable we might be to future shocks, what we should be doing next in terms of thinking about our economy. So Alistair, to kick off, thank you for joining us. Your book, Back from the Brink, which I've been rereading, is an enthralling book, is a kind of vivid retelling of the extraordinary sequence of events that began very early on in your tenure as Chancellor in 2007. So just to set the scene, I know you've told the story a number of times, but can you recall the events of this particular week 10 years ago and the weeks leading up to it, and how the Northern Rock emergency unfolded for you and the team at Number 11 and the Treasury?
Well, thanks for the plug for the book.
It's very, very good.
Good, we can go now then, having done that bit. It doesn't seem like 10 years ago, and in many ways, what we're seeing today is very much the backwash of what started 10 years ago with the collapse of Northern Rock, because, of course, the banking crisis became a wider financial crisis, which inevitably meant there was going to be a severe economic downturn. And we know that over the last 10 years, you've had austerity, people have seen their living standards fall, you've had really all sorts of political developments, culminating, in our case, in Brexit, on the other side of the Atlantic with Trump. But I trace everything you have today back to the crisis that happened 10 years ago. Now, it's hard to remember this now, but 10 years ago in the summer of 2007, we'd had over 10 years uninterrupted growth. The world economy looked pretty stable. The world naturally looked towards cooperation. Globalization was generally seen as a good thing, whereas now it has given way to a much darker, narrower economic and political view. We go back to Northern Rock. What was the problem? Well, remember, Northern Rock was a small building society which demutualized, and by the way, none of the demutualized building societies survived the financial crisis. They all either fell or they were taken over. Instead of funding its lending through deposits, which savers used to make, and then it was lent out, it started funding its lending by raising money through all sorts of exotic financial instruments, many of which were based on what was called the subprime mortgage market in the United States. If you don't know what a subprime mortgage is, the clue is in the name. Subprime means it's not terribly good. It usually means it was on property that wasn't worth very much and taken out by somebody who couldn't afford to pay it. But these products were used to fund the lending in this country. And of course, when the crisis hit in 2007, Northern Rock was the first to fail. And then the thing that I think all of us will remember is when the Bank of England said it would stand behind it, which in the old days was something to be welcomed. People think, well, the lender of last resort is there. People say, well, that means my money's safe and I can go home. The opposite effect happened. when people when heard about the Bank of England on the BBC the night before, the next day queues formed, and basically they stayed for about 4 days until, frankly, everybody wanted their money out, had got their money out. But that was the first bank run on a British bank in 100 years. And of course, that proved simply to be the forerunner of what happened 12 months later, when, on the morning of the 8th of October 2007, RBS, which was the biggest bank in the world at that time, started to hemorrhage billions of pounds. And I will always remember, you asked me about my memories, the one phone call I've ever received that did send a shiver down my spine, and that is I had to go to one of these meetings of the European finance ministers in Luxembourg, something my successors now apparently won't ever have to do, but I had to go to these things fairly regularly. And I got a call from the then chairman of RBS to say the bank was hemorrhaging money, and what was I going to do about it? And then I said, well, you've got a plan that's almost ready to go. And I said, how long can you last? And this is the thing that shook me. There was a pause, and he said, we're going to run out of money this afternoon. And if RBS had run out of money, its cash machines would have gone off, the doors would have shut, and there would have been a run on every other bank in the UK, and by that afternoon in the United States, because if the biggest bank in the world can collapse, then I think people would have thought anything collapsed. We were that close to the brink. And then, as I said, that is simply the foothills of what happened, both economically and politically. But it was a very seismic event. And I dare say you'll want to ask me why it happened and is it going to happen again and whatever.
Yeah, I do. But I want to go back to even ahead of Northern Rock, because you told the story, I think you were in Mallorca, weren't you? You picked up the Financial Times, you saw that there were a couple of funds in France that were closing, and you sensed there was something wrong. Actually, if you look at what was happening at that time, the evidence of problems in the subprime market were already there. I think a major subprime fund had already kind of fallen over in America earlier in the year. So there was really nobody in the Treasury had kind of spotted this at all, or were there people that were...
I think the story I tell in the book is instructive, actually, because this was about 4 or 5 weeks after I became the Chancellor of the Exchequer, and I went on holiday, as you do. I was dispatched in the early morning to get the milk and the bread, and as I was coming out, I happened to notice a copy of the FT, and I thought, well, I'm Chancellor now, I better get a copy of the FT and see what the house paper magazine's got to tell me. And I was back at the house we were staying in, and I just looked at this, and you're right, it is a small report buried inside that said Société Générale had suspended 3 of its funds because it couldn't value them anymore. These are investment funds, and they normally pay out money to investors, but the French bank had decided it had to suspend them because there was no value in them. Also, in a separate item, was one of the German regional banks, they're the ones that are supposed to invest in German industry, had got into subprime in a big way. There was big question marks over it. And of course, I immediately thought, well, if this is happening in France and Germany, London is the biggest financial centre in the world, it must be happening here. But what was interesting was that the Treasury, after 10 years, its centre of gravity was much more, on, economic growth, on other aspects of things, rather than on financial stability. The same thing happened in the Bank of England. The place to be in the Bank of England was on the monetary policy, interest rate side. That's where, the bright young things had gone. And frankly, nobody thought financial stability was a problem, despite the fact that, as you rightly say, the subprime problem had actually been spotted earlier on in the 2000s, but in President Clinton's dash to get people, the home-owning democracy and all that stuff, more and more people were taking out loans on properties that were worthless, and the minute interest rates went up, they started defaulting. And if you see, by the way, that film that came out, The Big Short, last year, is actually quite an accurate account of what was going on. The very fact you can say that tells you something about what had happened. But I think people had just become complacent.
So you think it was so this is what I was going to ask this. You think it was a psychological problem about complacency, not an ideological problem, which is that people had swallowed the idea that markets were perfect?
No, I don't think that. I think it's one of these things that governments wanted the population to be happy, and happiness was owning your own house. On the other side, people were, banks, as interest rates fell, were desperate to make some money and were happy to carry lending. They were also happy to get into these financial products where you basically bundled up mortgages and sliced the good up with the bad and sold them off, despite the fact no one had really done an assessment as to what would happen if things went badly wrong. And I think it's one of these things that so often in life when it all goes terribly wrong, it's not a result of someone's grand plan. It's just a series of of events that come together, and suddenly they conflated in 2007. The other thing I was going to say that makes the thing so much more difficult is, in the old days, a bank would collapse on its own, and it was a tragedy for the town or city or whatever. Now the system is so interconnected that a failing bank in Florida, the effect of that was felt in Newcastle a few weeks later with the Northern Rock crisis. So, I think no doubt we'll come on to look at economic political models and so on. But I think this one was a combination of policy that had gone wrong, lack of supervision as to what was going on, but also, when people can't make money out of normal lending and conventional lending with interest rates, they'll start looking for something else. And if someone comes up with a smart way of making money, so smart that it turned out that a lot of the bank's top management didn't understand what it was, then they'll do it. And it's only when suddenly people think, hold on, this is worthless, that panic then sets in.
But the Bank of England's initial response to Northern Rock was, well, let them, this is what happens in the market, and the famous phrase moral hazard, we just have to let this fall over because that's how market discipline works. And that, you had to fight that view.
Well, there's two things here. One is the concept of moral hazard, where, which basically means you should not, immunize someone from the consequences of their own stupidity by allowing them to take risks and don't worry, you'll step in. That's a good thing. At peacetime, when you're dealing with one-off institutions, you shouldn't be encouraging people to take on risks like that. At a time of crisis, moral hazard the concept isn't much good, where you've got banks, basically what was happening in 2007 is they stopped lending to each other. And with the result that there was less and less money in the system, which meant that Northern Rock obviously went first. But certainly as we went into 2008, there were points where RBS in the summer of 2008, normally banks lend billions of pounds to each other overnight, and over longer periods, 2 or 3 years. It's what they do. Towards the end, nobody would lend RBS money, any money, even overnight, which tells you something about people's view on solvency. Now, obviously, part of the problem, the underlying problem, was these banks didn't have enough capital behind them, they didn't have a buffer. But when you're heading for a crisis, then you're not going to be able to build up capital then at the best of times. That's why a central bank steps in to provide liquidity in the system. And I suppose the argument that I had with the governor at the time was, in the autumn of 2007, I was desperate for the Bank of England to put money in. By the way, the Bank of England is totally underwritten by the Treasury, so it's not like I was asking him to do something on his own. And indeed, I had to write, in fact, one day when all the archives opened, there's lots of letters from me to the Governor of the Bank of England underwriting, whether it's that or QE or all the rest of it. But the real problem was moral hazard, as I say, is a great concept as a matter of principle. But when you're firefighting and you're dealing with the imminent collapse of the system, it's not much good.
And there's a couple of ironies, it seems to be, about the Northern Rock story. So, tragic, well, one's a kind of a joyous irony, the one's a tragic irony. So the joyous irony way is we were prepared for what happened a year later because we had this kind of, well, it wasn't really a dry run because it was a crisis, but we had the Northern Rock experience. Yeah. So our readiness when the whole world started to, when this was surfing at the kind of global systemic level, was part of what guided our response then.
Yeah, and I've said often enough since then that I wonder what would have happened if there hadn't been a Northern Rock crisis in the autumn of 2007. Suppose we came fresh to all this in October 2008, just after Lehman's collapsed, when we were faced with the imminent bankruptcy of the biggest bank of the world and about the 6th biggest bank of the world, and they all belong to us. You'll notice, incidentally, all these banks are global in life. But they're pretty national when when it comes to the crash. For those of you who know Edinburgh well will know that if you come in from the airport, you pass a very hubristic RBS headquarters, which is based like a high street, with cobbled streets in the office, and the chief executive's office looks over the Pentland Hills. And every time I used to go past it, I used to think, I own that now. In fact, we still do. I think the Northern Rock experience, with the sight of people queuing up and who were not going to be reassured by the Bank of England standing behind them, and no matter what I said about their money being safe, the queues carried on really until the following Monday, when I think it blew itself out, if you like. It reminded me, many of you here will remember, remember the fuel drivers' strike in the early 2000s, when people suddenly, realized if you don't have fuel, it's not just your car that doesn't go, ambulances don't go, doctors can't come out, and food doesn't get into supermarkets. And people went through supermarkets like locusts. They stripped the shelves. And if you ever want, the one thing that any government must avoid, at a time like this, is for panic to set in. If people lose confidence in institutions, they lose confidence that they can get their money out to go and buy food or to get petrol or whatever, then you run the risk of civil unrest, basically. And if you think about it, if RBS had gone down, it would have taken everything else with it. And for lots of people have subsequently said to me, why don't you just teach these bankers a lesson and let the whole thing collapse? Well, actually, they wouldn't have suffered. But it's ordinary people who couldn't get their money, and the job losses would have been substantial. The damage would have been immense. And that's why we couldn't afford. Neither Gordon Brown and I were absolutely clear that we would do whatever it took to stop it happening.
And of course, in a way, the tragic irony in Northern Rock is actually its mortgage book turned out to be quite good. So it was a liquidity problem for them rather than a fundamental asset problem.
Up to a point, because if you look at where Northern Rock is today, 10 years afterwards, the money has not all come back yet. It will come back. So if Northern Rock was not the sort of company that could trade for 10 years on its own, they had to borrow one way or another billions of pounds from us, the taxpayer, and I don't know when exactly, probably in the next 2 or 3 years. I think there's about £4 billion still outstanding. But it will come back, because when you think about it, the thing that was the bad bank, those mortgages, because the economy has grown, prices have gone up, they've come good again. And the same will happen with Bradford and Bingley. But it could never have carried on. I mean, I have listened to one or two people who are involved in Northern Rock saying, if you'd left us alone, we'd have been all right.
They're not very fond of Robert Peston in the North East.
They're not terribly. Well, Robert's a good journalist. He's just simply reported that.
Of course.
But they should maybe have a word with one or two people who are still around, and one of whom still writes eloquently about the evils of government intervention.
In the Times. Reading the RBS episode, I mean, I think it's the nature of fear, isn't it, Alistair, that you often don't feel it at the time, but when you look back, you're almost terrified. It's almost more terrifying in retrospect, but at the time, you just have to deal with it. So that moment, that Tom McKillop phone call, we've got, we're running out of money in 2 or 3 hours. You said it was a bit unnerving, but when you look back, and this was the kind of the economic equivalent to the Cuban Missile Crisis, wasn't it?
Well,
I mean, it was.
It's funny you say that. I mean, afterwards, a few days afterwards, I thought it must be like receiving the call to say there is a nuclear missile coming towards us. You now need to press the button, and you think, you read about all this, and you think, yeah, well, it'll never happen, will it? I suppose because we had a plan, and we'd been through it 12 months before. I remember I flew back from Luxembourg because I had to go to the Treasury to put all this in place, and we were up until quite late that night. And I remember being back in my office about 5:30 in the morning, and the first thing you have to do in a crisis in this country is appear in the Today programme. And you've got to sound fresh and confident. It was just thinking that it was the sort of dark hour before dawn.
Reading the book, you were surviving on 4 or 5 hours sleep a night throughout, at best.
But you have to. You have to, because there's no one else to do it. And Gordon and I were the only 2 ministers that knew about this, of course. That happily we didn't have to be like Hank Paulson on the other side of the Atlantic, who had to go and broker all this with the US Congress, which just is amazing. Seeing him on bended knee before, both, senators on both and congressmen on both sides. We were able to do this. Of course, we're answerable to Parliament, and I went to Parliament that afternoon to say what we'd done. But the first outing, if you like, is when the markets open at 7 o'clock, which means, as I say, the BBC, the Today programme. I suppose it was It wasn't until I came to write the book and I thought, yes, it was a bit scary.
Yes. I mean, nobody wanted that crisis, but in a way it cemented your place in history. And reading the book, you're clearly proud of the role that you and the broader Treasury, the government, played at that moment of crisis. So it might sound like a bit of a cheap question, but was the crisis the high or the low point of your political career, Alistair?
I've yet to find words to describe what it was. I think we dealt with it, but the bit that depresses me is what happened after that.
Yes.
Because you may remember in August of 2008. These things always happen to me when I'm on holiday. I was on holiday in the Western Isles when I agreed to do a profile interview with a Guardian writer.
Well. Nice photos.
Yeah, the photo of the Western Isles Tourist Authority have been very grateful to me ever since for fantastic pictures of the wonderful beaches and sun that you get up there all the time. But I said at the time that I thought this economic downturn was going to be more profound and long-lasting than people thought. And rather than getting 3 hearty cheers for being honest or being realistic, you may recall that the announcement was greeted with something less than enthusiasm. But I didn't think 10 years ago that we'd still be living with the consequences now, which we are. When this crisis struck, we did a sort of classic Keynesian response to putting money into the economy to stop recession becoming depression. And it was done, incidentally, from every country, from Republican-controlled America to communist-led China. We all did the same thing. After 2010, there were too many people who thought the job was done and took the foot off the pedal and stopped doing it. And there were others who ideologically felt that it was the wrong thing to do, with the result that the growth was interrupted. It took a long time to gather in Europe until this year. Actually, it's been virtually sclerotic. But you're living with the consequences now, not just the economic consequences in terms of people's well-being and their income and so on. As I said earlier, the political consequences of it, where people are turning to things that I would argue are going to make the situation far worse. But that's a lost faith in existing institutions.
So I want to get into some of that in a minute. But on page 211 of the book, I'm just saying that so I actually read it. On page 211 of the book, you write, I'm quoting you, most models of financial regulation had failed. They'd failed simply because no one at whatever level had been asking the right questions with sufficient determination. What are the questions we should be asking now?
Yeah. Now, I like your page 200 and something. It reminds me of the first meeting I ever had as the Chief Secretary to the Treasury in 1997, and I got this massive submission, and all these officials came in, as they do in the first day they meet a minister, to see what to make of them. And this submission was absolutely massive, so I did the usual lawyer's trick. I turned to I think it was about the second last page, and I asked an official, what was that paragraph meant to mean? And everybody looked at each other, and then it turned out there was no one in the room who had actually written that. And actually, it turned out later, and I got to know them a lot better, no one actually knew who'd even read the thing, never mind anything else. But anyway, thank you for getting to page 200. I think what I was referring to there was the fact that there was an assumption that with not all the financial services industry, because I remember a lot of it didn't get into trouble, but with banks in particular, that if they were doing well, it must be okay. So you didn't need to ask any further questions as to what are they doing well on, why are they making all that money. And of course, as you know, banks can create money very easily. They frequently do. I think, whether it's, obviously there's culpability at board level, but both on the regulatory level and I think in governments, and it's not unique to, the UK government, it has happened, right across the world. I think people were not keeping an eye on what was going on, at, the problems that were bubbling up as a result of all that. I think there's further problems, obviously, which are, I suppose, are more surface now, and that is, I happen to think that a world in which we trade with each other, one where we instinctively cooperate in different parts of the globe, is quite a good thing. Where I think the idea of globalization has gone wrong is not enough attention was paid to those people who lost their jobs, those people who are not, being carried along with that. And then, that to me is not an argument for abolishing capitalism in the sense that I've yet to meet somebody who's coming up with a convincing alternative to replace it with. But it isn't one of the things that successive governments have neglected in this country, for example, is the massive imbalance between the economy of the southeast of England and the rest of England. Now, I use the word England advisedly. I am Scottish, but if you look at especially old industrial England, if you look at, frankly, a large chunk of England that voted for Brexit, you can see what the problem is. Some cities have done really well, but a lot of people have just not only do they feel left behind, but they have been left behind. So I think that we probably got ourselves into a situation by the 80s, 90s, the early 2000s where people did think that if the economy generally was doing okay, then everybody else would come along behind it. And that hasn't happened and didn't happen, and it's manifestly not happening now. And of course, the additional thing you've got now is the intergenerational problem. Each generation so far has been better than the one before it. Today's millennium generation is the first one that's poorer than the generation that came in front of it.
So before we just go back to those kind of broad economic and political questions, in terms of regulation, are you reasonably satisfied that the regulatory framework, albeit President Trump is talking now about pulling it back, do you think that we have guarded against those mistakes? And are you concerned that there may be other parts of the system now which might be vulnerable?
Banks in the UK and in America were cleaned up and recapitalised much more quickly than they were in continental Europe, but it's now happening in Europe. I think the European banking supervision system is okay up to a point, but it's not a EU-wide system. A banking union really only works if you're prepared to sanction transfers between one part of the continent to another part, which Germany in particular is not terribly keen on that. So they're better capitalised. I think the regulatory system is much tighter, and I would oppose any attempts to wind the thing back, and I don't actually think it'll happen in America either, actually. There's always room for refinement and development and so on. But I think most people recognise that there were excesses there that weren't spotted, that should have been spotted, and to turn the whole thing back would be a mistake. The problems will arise in the future when the last person who was here last time round leaves, when you lose the institutional knowledge. And you get a new generation of people think, I know how to make lots of money here. And there's no one around to say, just hold on a minute. That always heightens risks. The second thing is, and you can't avoid this, the world, financial world in particular, is globalized. It is very interconnected. So something can go wrong in one part of the world and it hits you in another part of the world very, very quickly indeed. And then I think there's the broader things. I think China will manage its slowdown better than people think. But one of the things you need to watch is that it's when economies slow down, many of the problems that have always been there suddenly surface. For example, one of the things that would worry me if I was still the Chancellor of Exchequer, apart from Brexit, is when interest rates go up, and they will go up, probably this year, but certainly next year, everybody knows that interest rates are going up, don't they? Except when they do go up, it will be a shock to the system. When the letter comes through the post saying, from the beginning of next month, your payment is now going to be whatever. And people thought, God, it's happened. And, especially with pay being, as you well know, being, squeezed at the moment, people will start to, the risk is they start to default. And our economy has been going along for the last few years. A lot of it has been driven by consumer spending, and a lot of that's been driven by people borrowing.
So I just want to go back to what happened after, towards the end of that Labour government. And there's something interesting happens here, which is that I think most experts look back and say that the actions that were taken by you and by Gordon Brown were the right things to do. And most people would say that the reason we got into this mess was to do with regulatory failings, and they would say that we had an over-reliance on tax from the financial sector. Not many people, I think, would say that it was down to profligate public spending, but yet that interpretation of what had happened, that it was profligate public spending, became by far the kind of dominant view. And I'm interested in your view as to why it was the narrative battle was lost so completely after that.
Well, I mentioned what happens when the people who were around at the time leave, and a hell of a lot of us left, active politics, after 2010. And you're right that the Tories, George Osborne and Cameron, were relentless in saying it was overspending, ignoring the fact they were urging us to spend more in many cases than we actually were. And also, it can't be the case that us spending on the health service caused Lehman Brothers to collapse in New York. It just didn't happen that way. But I think, it pains me and rather irritates me to say this. After 2010, people at the top of the Labour Party almost went along with this narrative to show that we were different. It wasn't challenged. Now, when you're on the back benches, as I was from 2010, it's very difficult actually to get the airtime that you need to refute all this stuff. And besides, then I got tied up in the Scottish referendum, which is another story, entirely. But
because that story, that narrative,
it
in some ways drove the policy. Because if your narrative is the reason we're in this mess because we spent too much, then the answer has to be austerity.
Well, that's right. Although, ironically, if you look at the policy that Philip Hammond is now pursuing with relation to deficit, it is a far looser economic policy than Ed Balls was advocating in the 2015 general election. And you may recall that Osborne said that my plan to halve the deficit in 5 years was grossly irresponsible, and it turned out he actually didn't quite make that, by 2015. But it's one of these things that it shows once a political narrative takes hold, it's very, very difficult to shift it. And especially nowadays when there's so many media outlets and so many opportunities to repeat the same thing over and over again, it is difficult to shift it. And I find it galling, but maybe I've reached the stage in life where can be slightly more relaxed about it, except that, the story has helped discredit sort of politics generally. It has helped people feel that the people around just don't have an economic answer. And then that opens the door to people who come along with very simplistic answers, as I would argue, and I apologise in advance to all the Brexiteers who are in this audience, to the people who are advocating Brexit. Because they say, look, everything else has failed. In their case, it's all Europe's fault. Or in Scotland, it was the nationalist argument, the whole thing has failed. Therefore, if only Scotland was independent, it would all be different. Trump was saying the same thing in the United States. And once these narratives take hold, they are very, very difficult to shift.
Just one other thing about the book, and I want to ask you a final question about the economy before we open it up to the room. But one of the things that's striking about the book is that you have a kind of critique of the way that Gordon Brown made decisions, which actually isn't that different from the critique that people had of how Tony Blair made decisions. And one of the things you say in the book is how much better decision-making would have been had more issues been taken to the cabinet, had things been discussed in the round rather than through a kind of succession of advisors, not to mention the briefing wars and all that kind of stuff. And also you want to emphasise a lot in the book the importance of Parliament and how important it is to be properly briefed and to give an account to Parliament. So there's lurking in your book, although it isn't the centre of it, there's something there about governance and how the Labour government kind of got it wrong about how it made decisions. And it made these things much harder for you because, again, as you say in the book, the process around the pre-budget report and the budget, where rather than sitting around a table and discussing it and ironing out what happened as a kind of a tag game of different conversations and briefings, is not a very effective way to run things.
I think that's true. And if you go back to the Labour Party in the 70s and 80s, it was pretty much ungovernable. I know you find that hard to believe today. But when Tony Blair became leader and Gordon became, his de facto deputy, and there was the sort of the driving force behind New Labour. One of the things that was so frustrating was the Labour Party, for a long time, had been quite incapable of reaching decisions, and they drove it from the centre, and therefore they decided quite a lot between themselves, and then it was passed out. And that was all right, I think, at the start, because I remember Tony Blair once saying, when people criticising, being on message, and he said, "Just you wait till we're not on message, and then you'll see what happens." And you look at what's going on today, and you can see when you have a government that does no message discipline, if you like, as to what it's trying to do. So I think that's the genesis of it. But I think one of the examples I use is tuition fees, which is topical just now. That if we'd been so much better to discuss that issue with 22 people around the table and looked, there's a perfectly good argument for saying students should make a contribution as well as the taxpayers. But then there's the other answer, the other point to be made is if this goes to its logical conclusion and you end up as you've got now, where paying for higher education is now almost entirely private, where does that leave you? And look at the distortions that the present system is now throwing up. So I think I think the case for cabinet government, I think, is very strong. And just so we don't just lock this into the Labour Party, if you look at what is going on today, Whatever else we've got, it is not cabinet government. There are two distinct factions depending on where you are on the Brexit argument, and from one day to the next, the government's message, whether it's on freedom of movement or whether it's on trade or the customs union or anything else, there isn't a message. And I don't know about any of you, I do not know what the government's position on any of these things is. And I think we do have a cabinet, a system of government in this country, and it ought to be used. I also happen to think, as I say in the book several times, one of the things that I found immensely helpful, whether it was the banking crisis or you remember when HMRC managed to lose the personal records of half the population when they lost the computer records of the child benefit stuff.
Which happened in the middle of all of
this. It just happened about a month after Northern Rock, just when things were getting a bit better. But
that was another great phone call, wasn't it? Because someone rings you up and says, we lost some records, and I think you said, how many? And they said, 25 million.
And I said, what exactly is on them? And he said, well, it's just the bank details.
It's just the bank details. A name, address, and bank details. Nothing more.
There's not much more you need to know, really. And what's worse, they've been posted from a building which, two things were wrong with that building. One was it was actually called the Watergate building. By the way, it's in Tyneside, it's not in Washington. And the other bad thing about it was I had opened it 10 years earlier. So when the Daily Mail turned up, there was a plaque telling them that I'd opened this on a happier occasion in 2000 or something like that. Let's just conclude on this. I've always, for ministers, if you have a relationship with your colleagues where they generally think you're honest, you will get a much better hearing in the House of Commons than ones, I've seen people in the past who have been supercilious to their colleagues or have been a bit high-handed, and, the ones you watch are not ones in front of them, the ones sitting behind, who will just, say, right, you're getting your comeuppance now. So I think cabinet government, parliamentary democracy is terribly important. And I think we ignore it at our peril, especially at a time like this.
So, final question for me, which is, in terms of the risks for our economy right now, I'm not an economist, but it seems to me the biggest risk we have is if there's a downturn, and there's one due, just as a part of a kind of global cycle, or if as a consequence of self-inflicted wounds like Brexit, we get into trouble, what levers do we now have? Because the level of private and public debt is very high. Interest rates are virtually zero. So what can we do? What would we do in the face of a downturn right now?
If you had another RBS tomorrow, which you won't because it's not nearly big enough now, but something of that magnitude, I think we would struggle. The thing you've got to bear in mind is this, that our rescue, if you like, of the banking system worked because people believed that firstly, it was the right course of action, but they also were confident in our ability to do it. No one ever said, can you afford it? On the same day as I announced the rescue for RBS, my Irish counterpart had been persuaded in the middle of the night by his colleagues to underwrite all the deposits of the three big Irish banks. And he rang me up to apologise because he'd told me that he'd always tell me if something like this was going to happen. And I was absolutely furious because, underwriting everybody's deposits, that's a massive liability. And I said, but your banks are bigger than Ireland. And he said, I know that. And I said, hope people don't notice. And they noticed about 3 hours later, and look what happened to Ireland. It absolutely collapsed because people said, you are not big enough. Now, if something of this magnitude happens again, and people will look at the British economy, and they will also look at the British economy in the light of Brexit and say, what are these guys, rather like, when your own bank manager is sizing you up, what's your prospects over the next few years? And if you just cut yourself off from your biggest trading partner and you don't have a terribly clear idea as to where you're going to end up, of course you'll have trade deals with, lots of people in the next 20 or 30 years, who knows what. But it's going to raise in people's minds how much they charge you, how much interest rates you're going to have to pay. So I do worry about that. And the thing about crises is you don't really know when the next one's coming from. But lots of people around now tell you they always saw it. They just forgot to tell you at the time.
Let's take a couple of rounds of questions. If you can keep them brief and if you can tell us who you are, that would be really great. Let's start, even though it's a dangerous thing, the back row. Troublemakers in the back row normally, but yeah.
The US Government Commission of Inquiry into the crisis said that it was caused by, key cause was corporate governance. and all the banks that needed American support complied with the system of corporate governance, which has not changed at all, and England has led the world of that system of failure of corporate governance. And they said it's nothing to do with solvency and liquidity because that's the bank's business to manage anyway. And so would you agree with the US Commission that the regulation is the present compliance? Banks are made to comply. That regulation is the cause of the crisis and not the solution. And if the Bank of England didn't bail you out, why didn't the government create money, which it can do, so you don't rely on central banks?
Thank you for that. Take two or three, if that's all right. Yep.
Thank you. Can you recall...
Tell us who you are, sorry.
Yes, John Bailey. I wonder whether you can recall the ebb and flow of bank regulation for the decade or so before the crash, and whether you think that was symptomatic of the complacency that's been mentioned previously.
Great, thank you. And let's take a third point over there. Here comes the mic.
I'm Howard Stone. Slight different take on this. Would you say that the lack of business experience by members of the House of Commons across the board contributed to a greater or lesser degree than in terms of their understanding of what was actually happening?
Right, let me do it in reverse order. No is the short answer. I think in any parliament, the voters decide who they're going to put in there, and I don't think it would ever be possible to say you've got to have so many people who've got business experience or teaching experience or whatever. Parliament can pass laws and it can arrange for regulations to be made to deal with things, but arguably the House of Commons has almost had too many people in the financial services industry in the past. And if you look at going back to Big Bang in 1987, I was in the House of Commons at that stage. We were in opposition, but it was stuffed full of people who did something in the city that was never clear what exactly the something was. So I don't think I would agree with you on that.
And anyway, I suppose you have to say it's not surprising MPs didn't understand what was going on when it was clear people who were running the bank didn't understand what was going on.
Well, I do remember on one of the select committees, they had three guys from, I can't remember which banks they were, but they asked them, what's a CDO? And two of them confessed they couldn't describe it, which is a shame because they own quite a lot of them. I think that the next two questions, the regulatory questions, are related. Let me start with you. I think, if you look at the late 1990s, turn of the century, this idea of what was called light touch regulation, which is a phrase I don't use myself, I've never used it because I think it's fraught with difficulties, was very much in vogue. In other words, you have minimal regulation because these guys know what they're doing. It was more about consumer protection rather than prudential regulation where you're worried about the solvency of a particular institution. And there's no doubt that dominated then. But you can go back further than that. At the risk of plugging somebody else's book, there's a very good book called Crash Bang Wallop, which is written by Ian Martin, who now writes for The Telegraph and The Spectator, I think, which was published last year, actually, which traces the City of London really from its inception, 400 years ago. And if you're interested, if you go through it, you'll see we go through cycles of people taking a close interest in what's going on and then easing off, going from the old days when these chaps knew what they were doing and the governor of the Bank of England just had to raise his eyebrow and it was all sorted, up to modern times. But yes, clearly the environment, from the guys with the stripy shirts and red braces in the 1980s through to where we are just now, yes, it was one where for a long time people thought that was okay. Going back, which takes me to the first question that was there, I think it's very difficult. I don't think you can separate corporate governance from regulation, if you like. What you can't have is a system whereby you have regulations and someone says, all right, I'm compliant with the regulations, so I can do what I want elsewhere. The people at the first line of defence for any organisation must be the guys that run it. The people running Northern Rock did actually know that they were vulnerable if two or three of the ways they raise money went wrong. What they never thought about was what happens if they all go wrong on the same day. What's plan B? And so your regulator can keep you pointed in the right direction if you like, but it's not, that's not sufficient in itself. What I think, but as I was saying to Matthew earlier, I would argue against trying to row back on the changes that have been made in the last, over the last 7 or 8 years, because I think the two things are complementary. Sometimes, a regulatory requirement can make you sit up short and say, well, yeah, are we compliant with that? Do we have enough money? And as you know, banks do hold more money just now, but one thing that regulation cannot do is substitute its judgment for the judgment of someone running a company. Otherwise, why would you bother having somebody running the company? You'd be like, an automatic train on railways. It would just go wherever you wanted. And it doesn't work like that.
But there were points in the process as to when there were people sitting opposite you who were lying to you about what was going on in their organisation and who were seeming to take no responsibility, but were expecting the government to kind of write them up. Did any of these conversations not awaken your inner anti-capitalist? I mean, were there not times when you just... in the book, you show remarkable... But there are certain points in the book when you're clearly amazed by the attitude that's being shown.
I don't think...
And also, interestingly, you compare our banks with French banks. You kind of say if it was France, there would have been a sense of pulling behind the national interest, but there wasn't really that kind of sense of responsibility towards the national economy.
I think in France there was a very clear sense of people have a very strong sense of la France, and if a French bank is asked to do something to help out, their instinct is to do it, and it's sometimes difficult to see what's going on there because it's all they're very they'd call it solidarity, I suppose. I suppose there's other words for it, whereas, in the UK, we are home to just about every bank in the world, but they happen to be here and don't have any sense of, we're British, which is why, 10 years ago when I said, to all the banks, if one of you doesn't buy it, we're going to have to nationalise it, and they said nationalisation's like communism. They all said, separately to me, this would be a terrible thing for the City of London if that happened. And I said, so what are we supposed to do? You won't buy it, and you don't want to just nationalise it. Well, you just say that was our problem, not theirs. And equally, on the night, before the bailout, when I had them all, and I said, "This is what we're going to do to provide. You're all going to have to increase your capital. If you can't do it, then the government will provide it for you." And I remember one of them said to me, "What if we don't like it?" And I said, "Well, tomorrow morning at 7 o'clock, you can explain to your shareholders why you haven't got a bank anymore." So I don't think anyone ever lied to me. It was just. Fred Goodwin said what we did to RBS was a drive-by shooting. Well, really? I don't think anybody, I don't know if people actually believe that. One of his senior colleagues in RBS did say to me, on one occasion, he said, the FSA, which was the old financial regulator, they don't understand what's going on at RBS. And it turned out that we're not the only ones that didn't know what was going on, as we found out in the months after we got it.
Let's take these 2 points here, and then... Well, let's start over there. Start top. And then we'll take these 2 points here. And I'm very keen to take questions from women. Anyway.
Thank you. Tom Levitt. Alistair, it was a pleasure working at close quarters with you between 2007 and 2010 and witnessing a political masterclass, so thank you for that. My question is this. Over the last 10 years, in America, in Iceland, in several European countries, there have been prosecutions, successful prosecutions against bankers. Until a few weeks ago, nobody in Britain had been charged with any offence arising from these events. Does that surprise you? And would it have helped if maybe that approach had been adopted?
Okay, and here.
Patrick McIntosh, if cryptocurrencies are going to take over as a means of value transfer, what happens to the existing system?
It's a tough one. And then, yep, there.
Part of the problem with...
Tell us who you are.
Cyril Levicki. Part of the problem with controlling banks is the macro-micro problem in terms of strategy. The strategy for any single bank or any group of banks is to maximise any current fiddle that's available. It was subprime then, it appears to be subprime on buying vehicles at the moment in this country. It pays every bank to follow that strategy at the micro level. At the macro level, the bank can't control it because it doesn't almost know that it's taking place. won't it happen again because there is no way of knowing until it's really gone wrong?
So, yes, prosecutions, cryptocurrencies and systemic risks.
Right.
You've got 5 minutes.
Hello, Tom. Nice to see you again. It's nice to have another ex-MP in the room. For anyone who wants to blame anyone, he's down there. I get asked this lots of times, and the difficulty is this, that to charge someone of a criminal offence, you have to have committed a crime. And, a bad judgment is very difficult, to criminalise, if you like. If you take HBOS. HBOS lost most of its money, not through acquiring, CDOs and all the rest of it, but through really bad lending decisions. It was lending money and always assuming that commercial property would never lose its value and all that. I don't think you can criminalise that. If you look at the charges, in fact, the only person, I think I'm right in saying, who's been convicted of a regulatory offence in relation to that is an HBOS employee who feels very aggrieved that he's the only one. And he's not low down, he's fairly senior, but he wasn't a director. But I think to convict anyone of a crime, you have to have a law that is quite clear, so you know what you're doing. Now, obviously, you get more difficult areas like conduct can be so reckless that like you'd go out and hit someone. It doesn't mean that it's not a defence, so you didn't mean to do it. It's what you did is sufficient. But I think it would be quite difficult to do that. I think the regulatory regime where you can get someone off the road and actually fine them very large sums of money, as much money as they've got, is a better way of dealing with it. And there's been a bit more regulatory activity, though not as much as you might have thought. In America, there's far more sort of plea bargaining. We in this country, if you're convicted of an offence, then you get fined. In America, they have this system where they can say, you did this, this, and this, and I'm going to fine you $20 million, knowing that you'll settle for 10. And I find that's it's an odd system. In Iceland, I think there was a degree of behaviour there that's caused the guy to get charged with a criminal offence. So I think it's difficult. On your point, which rather related to the first question as well, you are right that something may appear okay for a bank, but if everybody's up to it and doing the same thing, it's not okay for the system, which is why it's important that financial services are regulated. And one example you make is this, our car industry and the car sales have been to a large extent, kept going by the fact you can borrow money at fairly good, easy terms. And that's all fine as long as you can repay it. But when the interest rates go up on these things, then there's going to be a problem. Now, you could say to a lender who lent the money, well, tough luck, you should never have done it. But if lots of people are doing it, you then get the systemic problem that you're talking about. But it's really only a regulatory thing. And the Bank of England has also expressed concern about that. And that's what they're there for. And I suppose that takes me to your cryptocurrency thing. Which I think the answer to the question is nobody knows because nobody's thought about it, and there's still a view that this isn't going to happen, is it? But when people ask, well, where's the next big risks coming from? Cyber generally worries me. The fact that it's patently obvious you can paralyse a system. Look what happened to British Airways. We're invited to believe that someone pulled out the plug on a Saturday morning to hoover under the table or something, and when they plugged it back in, nothing came on. And not only in the tickets, but in the aircraft as well. And if you can knock out an entire airline, think what you can do if you can get into a bank systems. And equally in relation to the cryptocurrency, this is all very well until the music stops, and you say, well, where's all the risk? Who's going to do that? And that, again, that is a regulatory thing rather than an individual company thing.
Yes, we'll go to the back room and then here. It's a final set of questions, and then here.
Yes, I'm Ian Booth. We've spoken a lot about banks, and part of the original problem was the property market. How do you view the current state of the property market, and are there any risks there today that might trigger another crash?
Okay, and then here.
Hi, my name is Juliette Valdinger. I'm standing up to Matthew's comment about no women are asking questions.
There's someone else, there's another one over there.
Yay, brilliant. And a small proportion of the audience who are millennials, I fall in that generation. Just flipping the questions round a bit, have you got any recommendations or advice about how my generation, what we can demand, ask the government and financial institutions, since we are so at the deep end of bad places? Any advice, recommendations to make it a positive spin would be appreciated.
Good. And then finally,
Thank you. Heather Smith, some people who voted for Brexit did so knowing that we might lose some financial services industry into Europe, and actually, given some of what you've been saying today, they would say, actually, that might be no bad thing, that helps us manage risks, and some of that trickle down never happened in the first place. I guess, how much sympathy do you have with that type of view? But then secondly, what sort of vision of financial services post-Brexit do you think that government and financial services leaders should be aiming for?
I remember Peter Mandelson saying we need less financial engineering and more real engineering, but you know, it turns out it's harder than one might, well, it's very, very hard to shift the locus of your economy. But anyway, it's one of those.
Ever since I took an interest in these things in my teens, whether it was Harold Wilson, James Callaghan, right the way through, every government has said, we need to do more to help our manufacturing industry, and with the same degree of success, if you ask me. It was not an accident that, in Germany they still have a shipbuilding industry. We don't, apart from the one that's been kept going by two very large aircraft carriers, which it's not altogether clear to me what they're going to be doing. But, don't get me wrong, there's a lot of very good engineering in the UK. But, I think what we've failed to do in the country is encourage areas where we do have an expertise, and engineering was certainly, undoubtedly, was one. Let me just deal with...
But on this point, should we be worried if
we
lose financial services to Europe? Should we,
Yes, I'll tell you why. 10% of the population work for it, not all banks. 10% thereabouts of our GDP comes from it. If you live in a city like Edinburgh, where I live, it is by far the largest private sector employer. And it's not just banks, it's asset managers, it's insurance, pensions, and the rest of it. And when somebody tells me where we're going to replace those 10% of jobs, then I might give them a fair hearing. But until then, I'm not terribly keen on it. And actually, if you look at what is likely to go to Europe, it's not going to massively reduce the risk in this country. You're basically talking about things that have to be done in another regulated entity. If you look at the announcements being made, they're fairly, small at the moment. I think the risk is in the future, companies decide that, well, let's not base ourselves in London, let's go elsewhere. Now, some people say, well, hooray for that. Except that, it brings me on to the millennial point, we do actually need jobs for people to do in the future. And I suppose your question and your question at the back about housing is related. If you ask me my view of the housing market today, yes, it's true that if you're fortunate to have a house, it's gone up in value, and that gives you a great cushion, which your children and your children will get, because your children will inherit it off you, but their children will not, because the wealth will have been run down. What the big worry in the housing market in the UK, and I mean the UK, not just London and the South East, is there a chronic shortage of housing. Which is why when I was 22, I bought my first house, which people did. If I look at my children now, who are just coming into the 30s, there's no way they're going to buy a house, whether it's London or in Edinburgh. It's just out of reach. And instead of talking about it, successive governments should have done more. It used to be a badge of honour in the 1940s and 50s for Conservative and Labour governments to say, look how many public sector houses we've built in this last 5 years. And it's not something we can just leave to the private sector. It's just not happening. And when you look around what's going on in London, look across the river in Vauxhall, those houses where they've gone up in the last 5 or 10 years, and you go and look at it at night time, there is no lights on inside them. They've been bought, but no one's living in them. You know, it's just speculative building. And what's more, if the government tells you it hasn't got any money, the reason it was built is because the government is underwriting the cost of the Northern Line into the middle of it. And to say it's not a London problem, we haven't touched on it so much, and maybe for this audience not surprising, but that, you know, instead of wasting a very large sum of money on HS2, you'd be far better spending that money on infrastructure in the north of England and linking it to the east of England, which is 10 years ago, I know this because I was the Transport Secretary at the time, it was identified as the weak link, if you like. And it also does help the southeast as well because it takes some of the economic pressure away from here. But coming to your millennial question, the house, you know, I worry about it, and so should everybody worry about it, because you know, you were in this country, the way that things are organised, you are now working to pay off any debts you may have as a student. You are also paying for my pension, and I'm expected to live, if I ignore what the doctor says, for another 20 or 30 years. You know, and you're going to have to be paying for that. And I tell you, the one thing that I think in this country we do need to get a grip of, and that is you cannot have a situation where, you know, for electoral reasons, you give more and more to the over 60s, and it's being paid for by the under, I don't know how old you are, but, you know, the under 30s, you know, that, well, you can be just over 30 for this purpose. You know, that imbalance between the generations is just not sustainable. And the other thing, of course, is equally important is, and this is, we keep coming back to Brexit, where are the jobs going to be coming from in the future? And this, you know, here we are 10 years after the financial crisis. Our economy was just beginning to grow, but this, you know, it's now slowing down. I think we're the second slowest in the G7 at the present time. If it doesn't carry on growing, where are we going to get the wealth to pay for, you know, all the things that we take for granted, the health service, you know, pensions and all the rest of it? Which is why, you know, if I was a millennial, I'd have two complaints at the moment. One is the fact that the intergenerational problems are being stacked up, because I think all the parties have now said they're not going to get rid of this triple lock, which is great if you're my age, but it's not great from your point of view.
Well, we're in danger of building an entire manifesto here, Alistair. So that's all we've got time for, I'm afraid. Thank you for coming and for your excellent questions. A reminder that outside there are copies of Back from the Brink, which is, as I said, a fascinating read. Do get your copy, and Alistair's agreed to stay on and sign the book. As I mentioned, this has been the curtain raiser for a week of events reflecting on 10 years since the crash, so keep checking the RSA website for analysis, reflection, blog commentary, as well as information on further events in the series, which you can attend in person or watch online. But for now, please join me in thanking once again this evening's fantastic speaker, Alistair Darling.